It gives me great pleasure to be with you in this important discussion on finance for development and how can we link finance for development to the Sustainable Development Goals. The Addis Agenda is very comprehensive, very demanding, and for you to remember it easily, it's basically 4+3. 4+3. The four things are basically public finance, private finance, external funding, and domestic funding. These are the four finance-related sources of finance. Add to this the other three, very important to consider. One is public debt management. The second one is matters related to trade. And finally, are issues related to science, technology, and innovation. And I'm going to focus today on the four sources of finance. If you happen to be living in a developing economy today, you may need to think of all of the sources of finance. None of them can substitute the other because the demands of the very ambitious agenda of the Sustainable Development Goals are huge. And you may have come across already some estimates of the gaps of funding. Some estimates put a kind of a big figure of around $4 trillion. Others as recently made by colleagues from the IMF to estimate the gap to be around $2.6 trillion. This is only to cover the gaps of funding for education, health, and three subsectors of infrastructure, basically energy and transport, in addition to water. Unfortunately, in many of the low-income countries, the public revenue to GDP is much less than what is required to fund the SDGs activities. One of the things that we need to think of how to do a better job in revenue mobilization from the local level to the national level. How can we reform the tax legal frameworks? How can we reform tax collection? How can we do a better job in public spending? And we can look to an example of a country like Georgia that managed to have very significant improvement in tax collection using digital means and using as well better identification and better spending with substantive reforms in the tax department, and they managed to do very well in this area within a very short period of time. How can we leverage the private sector? How can we prevent crowding out the private sector in order to do a good job in financing basic infrastructure, social development like education and health? This may require huge investments in public-private partnership frameworks, in the legal arrangement. You need always to distinguish between the business side of the private sector and the financial side of the business sector. The business sector has a very important role as well to play beyond funding. The Business Commission for Sustainable Development, and they outlined among themselves four areas of work under the SDGs, and with that comes something like $12 trillion of investment opportunities on annual basis that could create hundreds of millions of jobs from the date that this report issued until 2030. How can we encourage the private sector to be active and positive participants in development? How can we prevent crowding out? And with a kind of an approach that we call the cascade. So if your government comes to the bank asking us to have, for instance, an airport or a terminal to be developed, one of the things that we'll be asking the government to do is basically to provide us with a simple answer. Can the private sector do it? So if the answer is yes, of course, we'll give the opportunity to the private sector without crowding it out. If the answer is no, the no here could be attributed to some issues related to regulations or red tape or some sort of competition policy. So we'll be more than happy to coordinate and work with governments in order to improve the business environment there, to encourage more domestic and foreign private sector to participate. Then the answer perhaps could be, even with all of these reforms, there could be major losses or the project might not be feasible. So the World Bank, through a variety of financial instruments, can provide grants or guarantees in order to make the project feasible or viable. If all of these attempts fail, in this case, we will fund the concerned government based on the rules adopted by the bank. And the rules here are basically to protect the environment, to take the social development seriously, and to make sure that there is rule of law and good governance for the project, what we call ESG. So many of you might be involved or aware of the advances of technology and its impact on finance. And I think it's being tackled as well in this rich course. So what's so-called FinTech? It's about using technology and innovation in order to improve the access to finance, in order to lower the transaction costs and to enhance the efficiency of the financial sector. But those who are developing the financial technology applications and ways of doing business discovered, as the regulators did, that FinTech requires RegTech. That is basically more sophistication of the regulators using technology in order to be better supervisors and regulators of this new innovation and development in the financial sector. But again, the FinTech people and the regulators discovered as well, which is a kind of a common sense, that they cannot really do their job better without having a sophistication in government. So the government itself needs to have its own GovTech. By that we mean more use of technology, more use of digitalization, having some good understanding of the role of technology in society and development from the very identification of the people. And we have a good program in that at the bank called ID4D, Identification for Development, that is using digitalization in order to identify the people and their rights and their share in social support and in development. But FinTech requires RegTech, RegTech requires GovTech, but I know what all of them requires what I call SOCTech, that the society itself, which is basically where all of the things need to start from and end at, needs as well to be very much aware of the implications of technology and how can they use technology better in order to have better access to finance, better access to knowledge, better access to markets, and to protect their own rights. So, and that all comes naturally and nicely under the Finance for Development and very much linked as well to the future agenda of the Sustainable Development Goals. It's not really enough just to talk about finance. We need really to have good understanding of the data and the evidence in order to guide the public financiers and the private financiers and the private sector to achieve the required goals and targets. And the other thing that had been very much missing in the discussion, and I'm happy that is being now emphasized, is the role of society at large in order to implement the SDGs. How to localize all of these kind of global goals in order to have an impact on the economy and the community at large. How can we mobilize all of these kind of resources supported with good evidence, with good efficient institutions and effective policies in order to make a difference at the community level, where all really matters when it comes to the impact of the SDGs. I hope that this program and this particular popular course will be useful, and it will be a good introduction to you in the variety of knowledge sources that you need really to have a good command of in order to participate actively in achieving the Sustainable Development Goals.